Good evening and welcome to my channel. US-China-E's high-level negotiators wrapping up 2 days of marathon talks in London with an agreement in principle to a framework that now awaits sign-off from President Xi Jinping and President Donald Trump. This breakthrough follows escalating tensions marked by tit-for-tat tariffs and stalled discussions earlier this year. To understand the significance of today's announcement, we need to step back and examine how we got here. The US-China trade war began in July 2018 under Trump's first administration, when the US imposed tariffs on roughly $350 billion of Chinese imports, with China retaliating on $100 billion of US exports. What started as targeted trade measures quickly escalated into a full-scale economic conflict. By 2025, under Trump's second term, tariffs had reached unprecedented levels. The U.S. imposed a staggering 145% tariff on Chinese goods, while China responded with 125% tariffs on American products. These are the highest tariff rates in modern trade history. According to the Peterson Institute for International Economics, as of now, the U.S.'s average tariff on Chinese goods stands at 51.1%, covering all imports, while China's average tariff on American goods is 32.6%. These levels threaten to plunge the global economy into recession. The human cost has been enormous. American farmers lost billions in export revenue, manufacturers struggled with rising costs, and consumers faced higher prices on everything from electronics to clothing. The trade war created what experts called supply chain chaos and business uncertainty. The first glimmer of hope came in May 2025 when negotiators met in Geneva and achieved what Trump called a total reset. This temporary ceasefire brought us tariffs on Chinese goods down from 145% to 30%, while China reduced its rates on US imports to 10%. The Geneva Agreement was supposed to provide a 90-day breathing space for both sides to negotiate a comprehensive trade deal. China pledged to eliminate restrictions on critical mineral exports, particularly rare earth elements that are essential for everything from smartphones to electric vehicle batteries. But the Geneva Truce quickly began to unravel. The U.S. accused China of being too slow to release exports of rare earth minerals and magnets. Meanwhile, Beijing accused Washington of violating the agreement by halting sales of computer chip design software to Chinese firms, revoking visas for Chinese students. These mutual accusations of bad faith led to a critical phone call between President Trump and President Xi Jinping on June 5, their first direct communication in months. This conversation, described by Trump as a very good talk, set the stage for the London negotiations. The talks took place at Lancaster House, a magnificent 200-year-old mansion near Buckingham Palace that has hosted historic diplomatic negotiations for generations. The choice of venue was deliberate neutral ground away from the political pressures of Washington and Beijing. Leading the American delegation were three of Trump's most trusted trade officials: Commerce Secretary Howard Lutnick, a billionaire Wall Street CEO who survived the 9/11 attacks that killed 658 of his Cantor Fitzgerald employees; Treasury Secretary Scott Bessent, a former hedge fund manager with 40 years of global investment experience; and Trade Representative Jamieson Greer, who previously served as Chief of Staff during Trump's first-term China negotiations. China sent an equally high-powered team led by Vice Premier He Lifeng, a close ally of President Xi who has served as the country's top economic official since 2023. He was accompanied by Commerce Minister Wang Wentao and Vice Commerce Minister Li Changeng, who recently replaced Wang Shaowen as China's chief trade negotiator. According to sources close to the negotiations, the talks were intense but constructive. Commerce Secretary Lutnick described the need for both sides to remove negativity to make progress. The discussions continued for 2 full days, with marathon sessions lasting well into Tuesday night. So what exactly did they agree to? While full details remain confidential pending presidential approval, we know the framework addresses several critical issues. First and foremost, China has committed to accelerating exports of rare earth minerals and magnets. This is crucial because China controls nearly 70% of the world's rare earth production, materials essential for electric vehicles, renewable energy systems, and defense equipment. According to President Trump's social media posts, the deal would maintain China's current 10% tariffs on US goods while keeping US tariffs on Chinese imports at 55%, a significant reduction from current levels. However, these figures haven't been independently confirmed by Chinese officials. The U.S. has also agreed to ease certain export restrictions on technology sales to China and restart the processing of Chinese student visas that were suspended during the recent tensions. This represents a significant concession from the American side. However, critics point out that this is essentially the same deal both countries agreed to in Geneva, leading some to question whether real progress has been made. As Emily Kilcrease, a former Deputy Assistant US Trade Representative, noted, they've come back together to say yes, we've already agreed we should stop punching each other in the face. Let's actually stick to it this time. Financial markets have responded cautiously to the London Framework announcement. While there was initial optimism about reduced trade tensions, investors remain skeptical about the deal's long-term viability. Chinese stocks actually declined on Tuesday as talks continued, reflecting uncertainty about the outcome. The rare earth minerals market saw immediate volatility, with prices fluctuating as traders tried to assess the impact of China's commitment to resume exports. These materials are so critical that any disruption can affect entire industries from automotive to aerospace. International leaders have welcomed the news with cautious optimism. The UK government, which facilitated the talks, expressed hope for a peaceful resolution to trade disputes that have threatened global economic stability. European officials are particularly interested in how any US-China deal might affect their own trade relationships with both powers. Economists warn that despite the positive rhetoric, the fundamental issues underlying the trade war remain unresolved. China's massive trade surplus with the U.S., concerns about intellectual property theft, and disputes over technology transfer are not addressed in this framework. The framework now goes to President Trump and President Xi Jinping for final approval. Commerce Secretary Lutnick expressed confidence that Trump would approve the agreement as early as Wednesday, saying, "I feel really good about where we got to, but time is running short." The 90-day suspension of massive tariffs negotiated in Geneva is set to expire on July 9th. If the framework isn't approved and implemented by then, both countries could revert to the punishing tariff levels that were choking global trade. President Trump continues to push for a face-to-face meeting with President Xi, which could provide more substance than these technical negotiations. After their recent phone call, Trump said he had invited Xi to the White House and accepted an invitation to visit China at a certain point. The London Framework represents a critical moment in the U.S.-China relationship. While it offers hope for reducing trade tensions, many details remain unclear, and the ultimate success depends on political will from both presidents. As one Trump ally noted, this is not a trade deal. It's a framework, and there's still a lot of details to be negotiated. For American consumers, businesses, and the global economy, the stakes couldn't be higher. We'll continue following this story as it develops and bring you the latest updates on what could be one of the most consequential trade agreements of our time. Stay tuned as we monitor leader-level decisions and the implementation process. If you found this analysis helpful, subscribe for ongoing coverage. Thanks for watching.